In what seems to be an endless stream of major retail store closures and bankruptcies, Big Lots has become one of the latest to suffer a steep decline, facing a potential end to its near 60-year history. With hundreds of stores suddenly closing over the past few years, what once was America's biggest closeout chain with more than 1,400 stores became entrenched in financial ruin, losing hundreds of millions per year and owing between 5,000 and 10,000 creditors a total of $3.1 billion. So what happened? Where did it all go wrong? And will this be the end of Big Lots? Find out in this episode of Business Tales. Our story begins in 1967, when Sol Shank, a Russian immigrant and lover of closeout deals, founded Consolidated Stores in Ohio, dealing primarily with the sale of auto parts. In late 1975, Sol bought the remains of Malcolm Brickland's car company and sold off the remaining 300 Brickland cars, along with the leftover parts inventory. By the early 1980s, Shank, along with business partner Jerome Schottenstein, invested in DeLorean Motors prior to the company's abrupt demise, paying the Bank of America $18 million for a stake in the company. After founder John DeLorean was arrested and charged with conspiracy to obtain and distribute 55 pounds of cocaine, Shank paid another $1.5 million to obtain the company, along with approximately $1.2 million worth of DeLorean parts. This also gave his company the exclusive distribution rights for the remaining cars and parts in the U.S. In 1982, Consolidated opened its first closeout store called Odd Lots in Columbus, Ohio, the beginning of what would later become Big Lots. Just 1 year later, drugstore chain Revco bought a New Jersey-based closeout retailer called Odd Lot Trading Co. As Consolidated's Odd Lot stores expanded beyond Columbus, Ohio, Revco took issue with the fact that another closeout retailer with a very similar name was operating a chain with aspirations of expanding to the national level. Consolidated Stores Corporation agreed only to use the name Odd Lots for its stores located within a certain radius of Columbus. Beyond the agreed radius, Consolidated began opening stores under the Big and Small Lots name. Almost there. Eventually, the stores would be rebranded as the Big Lots we know today. In 1985, the company went public with a $33.4 million stock offering with plans on opening several new locations across the U.S. With the title of the largest closeout chain in the country, the company continued to grow explosively throughout the remainder of the 1980s.
Makes me feel happy. Makes my wallet feel good.
The hard work and innovation proved to pay off, and in 1994, Consolidated Stores Corporation, or CSC, was named one of the 10 most profitable chains by Discount Store News. By the mid-90s, the company had also expanded into the toy market with ownership of several different subsidiaries, including Toy Liquidators and the Amazing Toy Store, and in 1996 decided to purchase KB Toys for a cool $315 million. But this is where things would begin to change for the ever-expanding retail conglomerate. At the time, company VP and CFO Michael Potter was quoted as saying, "Toys is the best closeout business we have. We think we will be the true value player in toys." Unfortunately, the gamble did not pay off. KB Toys and Toy Liquidators, purchased by CSC for a total of $329 million, had been an immediate disaster for the company as the toy market began experiencing overexpansion. That didn't stop the company from believing as they continued to sink money into KB Toys, investing $80 million alone into kbkids.com. By the year 2000, CSC began to look at restructuring and repositioning when they let go of KB and Toy Liquidators, selling the brands to Bain Capital for $305 million. By 2001, the company would officially change its name to Big Lots and begin to bring its more than 1,300 stores, some of which operated under various names like Odd Lots, McFrugal's, and Pick 'n Save, together under the Big Lots name. Big Lots would then go on to invest $80,000 per store for paint and other visual improvements. and in an effort to expand its customer base and include a slightly more affluent clientele, changes to the company's stock were also made, including plans to expand their home furnishings and seasonal items. Food items as well as more traditional retail products were also added in an effort to attract a wider customer base who could simultaneously shop for discount goods as well as grocery and home good items. But by the mid-2000s, the company had begun to slow down, closing 170 stores nationwide in 2005. Despite staying afloat and mostly profitable throughout the 2000s and 2010s, overall growth in sales were somewhat stagnant as the company walked a tightrope between being a closeout store and a traditional retailer. While stocking more traditional retail merchandise as well as groceries may have seemed like a good strategy in attracting more customers, Big Lots lacked the buying and negotiating power needed to compete with traditional retailers like Walmart and Target. This would make lower profit margins necessary in order to stay competitive in the traditional market. In 2019, the company acquired Broyhill Furniture and during the pandemic actually saw an increase in sales, primarily due to a temporary influx in furniture sales nationwide. This led to 2020 being the most profitable year in the history of the company. In 2022, the company announced it would open hundreds of new stores over the next several years and decided to engage in stock buybacks. The company spent nearly $600 million buying back its own stock, believing they would be able to sell it again at a high price after the company experienced its inevitable growth spurt. But that didn't happen. After the pandemic, furniture sales nationwide had dried up, leaving Big Lots with a huge surplus of inventory and forcing massive closeouts and an unprecedented drop-off in sales. That stock that the company repurchased from the market for around $50 a share has now dropped to less than $1 per share, leaving Big Lots with unsurmountable debt and leading them to file for bankruptcy. Big Lots closed 52 stores in 2023, and by mid-July, they announced the closure of 35 to 40 more underperforming locations nationwide, blaming inflation as part of their decision. Several more locations would continue to close throughout the year, and finally in September, it was announced that Big Lots would file for Chapter 11 bankruptcy, with hopes to sell itself to Nexus Capital Management, a reality that unfortunately did not come to fruition, and it was then announced that the company would be going out of business and closing its remaining 963 stores. Finally, a deal to purchase the company was made with Gordon Brothers Retail, who will transfer up to 400 stores to Variety Wholesalers, who will retain the name Big Lots. Sadly, the remaining 500 or so stores are expected to close for good. After several decades of success, followed by a sharp decline, it seems the Big Lots story isn't over after all, at least for now.